So today I'll be talking about input tax credit. So what is input tax credit? Supplier of goods or services or both can take credit of input tax charged on supply of goods and services or both to him which are used in course of the business. So these provisions are given under section 16 to 25 and rule number 36 to 45. So it's available to avoid the cascading effect of tax. So what are the conditions for taking ITC? So first thing is there are 9 points relating to ITC. So the first point is registered person. So registered person, only the person one who is registered under the GST is available to take input tax credit. So they are available in respect of input supplies of goods or services used in the course of that business of the person claiming the ITC. So avail the benefit, it should be credited in the electronic credit ledger. Point is the tax invoice. So ITC is available on the basis of any invoice is issued by a supplier of goods and services. So the next point is any invoice issued by the registered dealer or they are paying under a tax under the reverse charge mechanism. A debit note issued by a supplier. So a bill of entry for the assessment of IGST for on imports. Any documents which is being issued by an import service distributor. And the last third point is the uploading. So on what basis the data is being uploaded by the input supplier in the form GSTR1 and form GSTR2A. So it is being generated the same on the recipient. So for the recipient, data of GSTR2A is auto-populated based upon the GSTR1 uploaded by all the input suppliers of a dealer for a tax period. Fourth point is fraud. No input tax credit can be availed by a registered person in respect of any tax paid in pursuance of any order wherein demand has been confirmed on account of any fraud or willful misstatement, suppression of facts. So the fifth point is receipt of goods and services. ITC is available only if the registered person has received the goods and services. The sixth point is time limit to avail ITC. So ITC is available only as soon as the goods and the services are received. So there are two cases: due date of furnishing of the return under section 39 for the month of September or furnishing of the annual return. So whichever is earlier, and this applies in case the registered person is not shall not be entitled to take ITC in respect of any voices after these two conditions. The seventh point is failure to make payment to supplier or input of goods and services. So if payment is not made within the 180 days, ITC will have to be reversed. The eighth point is tax component of capital goods. It is where the registered person has claimed depreciation on GST component of the cost of capital, land and plant and machinery under the provisions of Income Tax Act. ITC is on the said GST component and shall not be allowed. So the ninth point, the last foremost point, is in items not eligible for ITC. What are the items? So there are 9 items. So first, mainly food and beverages, outdoor caterings, security, beauty treatments, health services, cosmetic and plastic surgery, leasing of motor vehicles and vessels or aircraft services refer to a section 17 subsection 5 and subsection A or AA. And last, life insurance and health insurance.